Welcome to the deep dive. Apple, I mean, everyone knows the name, right? They're everywhere.
Absolutely. Hard to avoid them.
But how does this tech behemoth actually, work as a business? Today we're going beyond the latest product launch.
Right. We're digging into their official 2024 annual report, the Form 10K.
Exactly. To really understand what's under the hood, our mission here is to pull out the key stuff business segments, the financials, their strategy, basically giving you the essential insights into Apple's engine room and the challenges they're up against.
Yeah, the 10K, it's not exactly light reading, but it's packed with detail. It covers their fiscal year, which importantly ends in late September 2024. So it gives us a solid picture of their performance leading up to that point.
And clues about the future, too, presumably.
Definitely. It includes their own view on risks and forward-looking statements. We'll navigate it together, pull out what really matters for you without drowning in data.
Okay, sounds good. So Apple operates globally, obviously. How do they break down their business geographically in this report?
They use 5 main reportable segments. First up is the Americas, that's North and South America together.
Okay.
Then there's Europe, which is a pretty broad category. It includes actual Europe, but also India, the Middle East, and Africa.
Interesting grouping.
Yeah. Then Greater China, that's mainland China, Hong Kong, and Taiwan. Japan gets its own segment. And finally, there's the rest of Asia Pacific, covering places like Australia and other Asian countries not already listed.
Right. Greater China standing alone makes sense. It's a huge market for them. But why manage these other big regions separately if they're selling, well, basically the same stuff?
That's a good question. While the core products and services that iPhones, Macs, services are similar globally, managing these segments separately lets them tailor things.
Taylor, how?
Well, things like responding to local customer tastes, dealing with different retail partners and distribution networks, and navigating, the unique economic conditions or competitors in each specific area, it gives them more focus.
Got it. So beyond where they sell, let's quickly list what they're selling, the main categories.
Sure. On the product side, you've got the big ones: iPhone, Mac, iPad. Then there's the wearables, home and accessories category.
That's Apple Watch, AirPods.
Exactly. AirPods, Apple Watch, HomePod, and now the Apple Vision Pro falls in there too. And then the services side is huge and growing.
Right. What's included there?
Things like advertising, AppleCare support, their cloud services, iCloud, basically digital content like the App Store, Apple Music, Apple TV Plus in-ear, and also payment services like Apple Card and Apple Pay. It's a really diverse mix now.
Definitely feels like services are becoming more central. They're obviously not standing still, always launching new things. What does the 10K suggest about their overall growth strategy? It's more than just iPhone 16 replacing iPhone 15, right?
Oh, much more. The report really stresses continuous innovation. Timely introduction of new products, yes, but also new services and technologies. A core part of it is that deep integration.
The ecosystem idea.
Precisely. Designing the hardware, the operating systems like iOS and macOS, the software apps, and the services to all work together seamlessly. They control that whole experience. And underpinning all this is a massive investment in R&D.
Research and development.
Yeah, and the report specifically points out that the increase in R&D spending in 2024 was primarily driven by headcount.
More people.
Hiring more engineers, designers.
Got it. Investing in the talent to build the next big thing.
And we saw some results of that investment towards the end of their fiscal year, didn't we? Any specific mentions in the report?
Yeah, the fourth quarter of fiscal 24 was busy. They launched the iPhone 16 lineup, the standard Plus Pro, Pro Max models, also the Apple Watch Series 10 and the 4th Gen AirPods.
Standard updates, mostly.
Pretty much, but maybe more significantly for the future, they also unveiled Apple Intelligence. They describe it as a new personal intelligence system using generative AI models.
Ah, so they're moving to the AI space everyone's talking about.
Exactly. That signals a really important strategic direction. Okay, lots of potential there. But even Apple faces headwinds. What kind of risks does the company itself highlight in the 10K?
They lay out quite a few. A major one is just sensitivity to the economy, global and regional economic conditions. Downturns can really hit demand for their, let's face it, premium products.
Yeah, less disposable income means fewer iPhones sold.
Right. And it can also affect their suppliers' financial health, create instability across the board.
What other big picture risks are on their radar?
International trade is a big one. Think tariffs, trade controls. A lot of their manufacturing is concentrated in specific regions: China, India, Vietnam, Taiwan, South Korea, Japan.
So trade disputes could really bite.
Absolutely. Could increase costs, disrupt that incredibly complex supply chain they rely on. Then there's just the sheer force of competition
Always nipping at their heels.
constantly. They're in highly volatile markets.
Yeah.
So that R&D spend we talked about, it has to pay off. If they don't innovate effectively or if competitors manage to copy their intellectual property, that's a serious threat.
And supply chains themselves, beyond just trade disputes, that's been a hot topic everywhere.
Definitely. Apple details its reliance on outsourcing partners for manufacturing and logistics. It gives them scale and maybe cost benefits, but it means less direct control.
Control over what?
Quality, quantity, how quickly they can pivot if conditions change. They also mention risks related to single-source suppliers for some critical components. If one of those key suppliers fails,
Big problem.
potentially a very big problem, yeah.
Are there other dependencies on third parties?
Yes, quite a few. They need licenses for third-party intellectual property that goes into their products. There's always a risk they can't get or renew those licenses on decent terms.
Oh, okay.
And of course, the App Store ecosystem is vital. They rely heavily on third-party developers creating apps, so changes to App Store rules or regulations impacting it.
Like the Digital Markets Act in Europe.
Exactly. They specifically mentioned the DMA. That kind of regulation can force changes that impact their services revenue and how the ecosystem works.
Makes sense. And what about content for services like Apple TV plus Overdog?
That's another challenge, getting appealing digital content movies, shows on financially viable terms. Plus, the cost of producing their own original content keeps going up as competition heats up in streaming.
And finding the right people must be tough, too.
Critically important, they say. Attracting and keeping top talent in engineering, design, marketing. It's a hyper-competitive market. And nurturing their specific company culture is also key.
And finally, the legal and regulatory side. They seem to be under the microscope a lot.
Increasingly so. They mentioned the growing scrutiny, potential impacts from lawsuits, government investigations, new laws. Antitrust investigations, especially around the App Store, are explicitly noted as a risk, could lead to fines or force changes to how they operate.
Okay, that paints a clear picture of the operating environment. Let's switch gears then and look at the actual numbers, the 10K financials. What are the key takeaways from their income statement?
Right. First, just a reminder on their fiscal year structure. Ends last Saturday of September. Fiscal 24 and 22 were 52-week years.
But 23 had an extra week.
Exactly, 53 weeks in fiscal 2023. That extra week landed in their first quarter, which is already their biggest due to holidays. So comparing year-over-year figures around Q1 23 needs that context.
Got it. So profitability. How did their gross margins look in 2024?
Pretty healthy, actually. Overall, total gross margin dollars increased from about $169 billion in 23 to nearly $181 billion in 24.
And the margin percentage, that's often more telling.
That improved too. Total gross margin percentage went from 44.1% up to 36.2%, so they kept a bigger slice of every dollar of revenue.
What drove that improvement?
It breaks down differently for products and services. For products, the margin increased mainly because of cost savings getting more efficient in manufacturing, though that was offset a bit by currency fluctuations in the mix of products sold. Product gross margin percentage edged up from 36.5% to 37.2%.
Okay, a slight improvement there. What about services?
Services saw a more significant jump. Services gross margin dollars were up because service revenues were higher overall, and the percentage climbed nicely from 70.8% to 73.9%.
Wow, nearly 74% gross margin on services.
Yeah, very profitable, likely due to a different mix of services being sold, maybe more subscriptions, and just the scale benefits as that part of the business grows.
Services clearly boosting overall profitability then. What about their operating expenses, the cost of running the business day to day?
Those went up. Total operating expenses rose from about $54.8 billion to $57.5 billion in 2024.
And the driver there was mainly R&D.
That was a big part of it, yeah. Driven by that headcount increase we mentioned earlier, investing in people, selling, general, and administrative costs, that's G&A, also increased by about $1.2 billion. Marketing, sales support, corporate overhead, that sort of thing.
So gross profit up, but operating expenses also up. How did that shake out on the bottom line? Net income.
This is where it gets interesting. Despite the better gross margins, net income actually decreased slightly. It went from $97.0 billion in fiscal 23 down to $93.7 billion in fiscal 24.
Huh. So less profit overall, even though they made more on each sale. Why?
The main culprit was income tax. Their provision for income taxes jumped massively, from $16.7 billion in 23 to $29.7 billion in 24.
That's a huge increase.
It is. Their effective tax rate, the actual percentage of profit they paid in tax, climbed from 14.7% way up to 24.1%.
What caused such a big jump in the tax rate?
The report points to a specific one-time income tax charge of $10.2 billion. It's related to that long-running state aid decision dispute with the EU over taxes in Ireland.
Ah, that again. So a big one-off tax hit basically wiped out the gains from operational improvements on the bottom line.
Essentially, yes. Their core business became more profitable from a gross margin perspective. But this significant tax charge pulled the final net income figure down year over year.
Right, makes sense. Okay, let's look at the balance sheet. Snapshot of assets, liabilities, equity. What changed significantly there between end of 23 and end of 24?
Total assets grew a bit, from roughly $353 billion to $365 billion. Cash on hand, the most liquid stuff, stayed pretty flat, around $30 billion.
What about marketable securities? They usually hold a lot there.
They do, but that actually decreased from $132 billion down to about $127 billion. Both short-term and longer-term holdings went down. On the other hand, accounts receivable money owed to Apple by customers increased from around $30 billion to over $33 billion. Could be higher sales near year-end, or maybe payment cycles changed slightly.
And on the liability side, debt?
Total liabilities increased from $290 billion to $308 billion. But interestingly, their term debt longer-term borrowings actually decreased, went from $105 billion down to about $97 billion. Seems they paid down a chunk of their non-current debt.
Paying down debt. And shareholder equity.
That decreased, went from $62 billion down to $57 billion. That reduction is partly a result of the huge amounts they spend buying back their own stock.
Which leads us perfectly into the cash flow statement. How did the cash move around in fiscal 24?
Operations generated a ton of cash, as usual for Apple. Net cash from operating activities was $93.7 billion, very strong.
That's the core business churning out cash.
Exactly. Investing activities used about $10.6 billion. That includes capital expenditures like building facilities or buying equipment. But the really big number was in financing activities.
Let me guess, buybacks and dividends.
You got it. Financing activities used a massive $122 billion in cash. The lion's share of that, nearly $95 billion, 94.9 BNs to be precise, was spent repurchasing their own common stock.
Wow. $95 billion on buybacks.
Huge number. Plus another $15.2 billion paid out as dividends to shareholders.
Some massive returns to shareholders. What about free cash flow? Do they report that?
They don't explicitly label a free cash flow number in this part of the 10K, but you can get a good sense of it. Take the $93.7 billion cash from operations and subtract capital expenditures on property, plant, and equipment, which was about $8.2 billion. You still end up with a very substantial amount of cash generated after reinvesting in the business. Loads of flexibility.
And clearly, a huge priority is returning that cash to shareholders. Tell us more about the dividends and buyback strategy.
It's definitely a core part of their financial strategy. On dividends, they paid out 98 cents per share in fiscal 24, totaling that $15.2 billion. And importantly, that continues a trend of steady increases. It was 94 cents in 23, 90 cents in 22. They're signaling consistent growing returns via dividends.
Predictable income for investors.
Right. But the buybacks are just on another scale. That $94.9 billion spent in 2024 is enormous, and it follows huge buybacks in prior years, too. $77.6 billion in 23, nearly $90 billion in 22.
Why so much focus on buybacks?
The main goal is usually to reduce the number of shares outstanding. Fewer shares can mean higher earnings per share, which can boost the stock price. It's a major way they return capital and show confidence in the stock's value. They also mentioned using a commercial paper program, short-term borrowing, partly to fund these activities. They had $10 billion outstanding there at year-end.
Okay, so pulling all this together, the business segments, the financials, the risks, the shareholder returns, what's your overall assessment of Apple based on this 2024 report? Key strengths, key weaknesses.
Well, the strengths are pretty clear, aren't they? The brand is incredibly powerful, customer loyalty is intense. That integrated ecosystem of hardware, software, services, it's a huge competitive moat.
Hard for others to replicate.
Very hard. And they still demonstrate strong innovation. Plus, they generate just massive amounts of cash from operations, which fuels everything else, including those shareholder returns.
And the challenges.
Also significant. Dependence on the global economy is a big one. Geopolitical risks impacting their supply chain. The fierce competition means they absolutely cannot take their foot off the R&D pedal.
And the regulatory pressure.
That's a growing challenge, for sure, especially around the App Store. Antitrust concerns. That could force changes they don't want to make. And finally, just finding and keeping the best people remains critical and difficult.
And we should always remember the caveats in these reports, right?
Yeah, absolutely. The 10K itself is full of forward-looking statements. Apple explicitly warns that these are based on current expectations and are subject to risks and uncertainties detailed elsewhere in the report, particularly the risk factors section. Actual results could be very different.
So the big picture takeaway then.
I'd say despite the very real challenges, economic, competitive, regulatory, Apple's financial strength, their ecosystem, and their focus on innovation put them in a strong position. Their ability to generate cash and reward shareholders is undeniable. But external factors, especially the economy and regulators, will definitely shape their path forward.
So wrapping it up. Apple is this incredibly diverse global company. Services are increasingly key to profitability. They innovate constantly, but face major global headwinds and regulatory scrutiny. Strategy involves evolving products and pouring cash back to shareholders via dividends and especially huge buybacks.
Yeah, that sums it up well. And maybe a final thought for you to consider. Looking ahead, what's going to be the biggest driver or maybe the biggest obstacle for Apple? Is it going to be some radical new innovation they come up with, the impact of increasing government regulation, or just the unpredictable swings of the global economy and geopolitics? It's probably a mix, but which factor weighs heaviest? Something to think about.
That's a great question. Hopefully this deep dive into Apple's 2024 10K has given you a clearer view of the engine inside this iconic company, its strengths, and the road ahead. Definitely keep an eye on the news and analysis around them. Thanks for joining us on the deep dive.